yeah, it is Sunday, December 29th, a little bit before 5 p.m. Central Time, the best time. You know what that means. My name is Victor Jones, but you're not here for me. You're here for First Call, and you are here for the founder, the creator, Mr. Thomas Osnoff. Tom, how you doing, my friend? A little bit, but the show must go on, Thomas. The show must go on. I think, you know what it was? We had my son's 5-year-old birthday party, and so we had like 15, 20, 4, 5, 6-year-olds. And it's a petri dish. We had a big petri dish. And it happens every time, my friend. I have no immune system when it comes to those little ones, that's for sure. Thomas, did you have a good weekend, my friend?
I think it's kind of saved me. My weekend was good. It was super quiet here in Chicago. It was cold and rainy, and it rained all weekend. It was not a fun weekend, and the city was really quiet. A lot of people haven't come back yet, so it was just a very quiet weekend. So I'm actually looking forward to the market opening up tonight and tomorrow, and maybe it'll be more interesting than sitting around watching horrible football in the rainfall.
You know what I don't miss? I'm gonna talk for just a little bit so that our good friend can fix your mic. Apparently, there's an issue on your mic on. Oh, I think they got it. All right. So I think what I don't miss, Tom, is the two words cold and rainy. I suppose rainy we use over here, not cold. I don't miss that at all. At all, my friend. The only problem is I can't watch football. I got to get up at like 3, 4 in the morning to watch football.
That's okay. You're from Nebraska. You don't have any teams to root for.
That's so true. That's why we love the Oscars.
And they stink.
Oh, Jesus. That's blasphemy where I come from. But luckily, I like the Wolverines anyway, my friend. Tom, it's going to be a tight show. They're going to put up in 2 minutes, so I got to ask you, my friend. We've had 2 weeks in a row where we've had a pretty decent sell-off in one day. Should I think about, Friday's, the end of last week's action, as a decent sell-off, or has there just been so few red candles on the screen that I'm overdoing it in my mind?
Well, I mean, the funny thing about Friday is they kind of closed on what felt like the highs of the day, because they closed about 50 handles off their lows, which, when they made them earlier in the day, I was like, okay, this thing could get really ugly. I mean, it had the potential to get really ugly on Friday, and it didn't. And in the afternoon, things kind of dried up and the market kind of crept its way back. So they closed down, a little less than 70 handles. At one point, they were down, let's call it over 110, 115. So they really did rally back about 50 handles. So it could have been super ugly. It turned out to be just a nice sell-off. Should you be worried? I don't think anybody should be worried about anything, because we haven't had, other than a 10-year bull market, we haven't anything extended to the downside. So, I don't know there's any reason to be worried, but I think you should recognize that there's a lot of red flags out there, and this, these markets, eventually gravity does come into play. Problem is, timing is everything, and you kind of got to wait.
Oh man, it's been brutal waiting. That's for sure. But
no, it's a tough wait, and there were a lot of crazy moves on Friday. I mean, they crushed the bonds in the close. On the close on Friday, I actually bought bonds at 113.03, which actually they're only 113.05 right now, so 2 ticks lower. But it was kind of, they crushed the bond market, they crushed the notes. That was really a and like they do on every Sunday night, they just took natural gas up 10% tonight on the opening. That's the biggest move we've seen. It's funny when natural gas has like a 10% move overnight. It's like so ridiculous.
Every Sunday.
No, usually it's like 5%. Tonight it's 10%.
Yeah, that's true. Not much doing in the equity indices on the open. To your point, natty gas
equities 10%. Are up. Yeah, S&Ps are up 750. They closed, like I said, they rallied them on the close pretty good. So this is just a little bit of a continuation. They're rallying up the Nasdaq. They rallied the Nasdaq about 200 points off its lows. They rallied the S&Ps about 50. So there was some pretty decent sized rallies on the close.
You mentioned before bonds. I'm just going to talk about the 10-year here at 4.62. Do equities just not care about the cost of money, higher interest rates? I mean, would you expect at some point 4.6, 4.7, at 5? At what point would you expect interest rates to perhaps start to weigh on the marketplace, or is that the 2022 playbook and you can't think about it that way in 2025?
I mean, I think it's the 2008 playbook. I think it's a 1988 playbook. I clearly the stock market has not cared what the bond market thinks or does for a long time. I mean, at some point when there's a massive amount of debt refinancing and they have to do it at, I think
$7 trillion in treasuries expire in 2025.
Right. Right. And so when you have to refinance those, at double the rate that you had them before, that's going to be a little costly, and maybe some people start to pay attention. But up till now, it's really fascinating. I'm long bonds because I think they're oversold. But what's really fascinating about it is that rarely, in fact, going back as I think I started trading bonds in 1982 or 1983, like literally like 40 years ago, whatever it was, 40 years ago. And I don't ever remember a time except when the stock market was crashing and there was a flight to quality or something like that. There was crazy volatile times in the stock market, or it was around Brexit or anything like that, where you'd have these, 2, 3, 5 handle moves in the bonds. I don't ever remember a time when the bonds they went exactly the opposite move of whatever the Fed was doing. I don't remember a time other than a 1 or 2, day outlier move, that kind of thing. I don't remember a single incident over the or incidents over the last 40 years when they've just gone the complete opposite, like, 10%, not 10%, but 8% the other way.
Yeah. But I mean, don't we have to find, we've had how long of the Federal Reserve and all these central banks intervening across the curve, and now all of a sudden they're raising rates at the same time they've not only stopped quantitative easing to a certain extent and zero interest policy, but they've actually gone the opposite way with quantitative tightening. They're letting all this stuff roll off their balance sheet. So we have to find a natural market buyer after 15 years of central bank intervention, and the likely interest rate where that natural market buyer is not going to be 2 or 3 or 3.5% when you're running $2 trillion deficits. So, I mean, it's 5% wouldn't surprise me in 2025. 5.5% wouldn't surprise me. I just think, to your point, it seems like we're going straight there, Tom.
It sure does.
That's what's crazy about this bond move. We're going straight to 5. We're finding it versus like some two-way action.
If you didn't know we were talking about markets, you'd think we're going straight to hell, because that's the only time anybody ever uses that term. We're going straight to hell, it sounds like. But straight to 5%, is not the worst thing in the world as a consumer. If you asked me as a consumer, as an investor, as somebody that wants to receive, interest on cash, things like that, 5% is a good number. Like, I would be very happy if you could just if you could lock in 5% for the next 10 years, I'd say, okay, I'll take it.
I don't disagree with you. I'd love it if inflation wasn't 3% while I was getting the 5%, though.
Well, you're going to have, inflation. I don't see, if bonds are trading over 5%, inflation is going to be, is a pipe dream at 3%. You're going to be looking at significantly higher inflation, and you're going to have a challenge because, you've got a new administration that's going to be coming in that ran on a platform of reducing the deficit and knocking down inflation, and it's going to be a real challenge to do that. And people are going to learn that that just like the Fed doesn't control the bonds, the administration doesn't control the economy. Everything is cyclical. So
what do you mean by that?
because you don't vote for people because you actually think that they have some control. They don't. I mean, the economy works in cycles, and it's not like something that one yin yang can control one way or the other. I don't care who the yin yang is, but no yin yangs can control rates, and no yin yangs control the economy. So, I mean, if they could, we'd always have a perfect economy. We'd always have the perfect rate structure. So, and you can just look anywhere you want around the world, and that's just the way things work.
Yeah, that's true. They do their best to control GDP, though. VIX at 1595. What are your thoughts on vol structure? 2 weeks ago, we were talking about backwardation, sort of a normal VIX curve here.
It's a normal VIX. The forward curve in the VIX is very normal. The forward curve going out through 2025 is in perfect contango, and it shows the VIX just steadily increasing all year. They're expecting the marketplace right now it's looking for a I shouldn't say normal, because in the VIX world, things normal is actually would be the higher volatility front month, lower volatility back month for much of the time. But I think that I think people are going to come to the realization, and I think 2025 is going to be the year that people come to the realization and they understand that the Fed is there. The Fed is there to provide catastrophic integrity, and whoever is in charge is politically is also there to provide catastrophic integrity. You can't control every tick in the marketplace, and I think that's going to be kind of a rude awakening and the second coming in going forward, because people are smarter now. The information is disseminated better. Everybody has way better technology. 20 years ago, when we were sitting around talking about the yield curve in 25 years ago in 1999, people had no idea what you're talking about. You literally could not trade it. If you wanted to, you couldn't trade it as a customer. Today, you can do anything you want. The whole world's changed. So,
are you saying 2025 is the year of volatility? Is that what you're saying?
No, Tom? I'm not. No, I'm saying 2025 is the year of realization. 2025 is the year that people actually start to understand that there's certain things that the market, there's certain things that the market does and says, and it's not something that's easily controlled by anybody or anything.
All right, let me ask you. I'm going to ask you a short-term and then a long-term question before we get Pete in here.
Sure.
Short-term question is, given a little bit of volatility in the uptick in vol we had last week, were there any good short put candidates Friday, or you think going into this week? Did you like I won't say short put candidates. I'll just say volatility premium selling candidates. Did you like anything Friday or going into Monday?
I do think that depending on what you like. I did sell some puts. I'm trying to remember what I was selling puts in on Friday. I'm definitely not selling any puts yet in any NASDAQ stocks or any of that kind of stuff.
I was just going to ask you about Microsoft, which is off the
are you kidding me? Those things are so overpriced.
I know what you're going to say, but I want you to say it just in case.
No, not even close. I mean, if you wanted to look at certain stocks that have been, kind of crushed or something, like an example would be if you really wanted to get into tech stocks, and you wanted, or chip stocks, you wanted to buy, Micron down here after selling off, $25, or you wanted to buy Intel still on its, on its multi-year low. I'm fine with, I wrote about this. I'm fine with dogs of the NASDAQ, but I'm not fine with any one of the top 100 stocks that just sold off a few pennies. Not at all. You could sit here and go, wow, look at Coinbase. It's down to 265, and if you're bullish and you want a Bitcoin play, you're going to get more bang for your buck in Coinbase than you will in Bitcoin here. And that's true, but I'm not bullish on Bitcoin here, so Coinbase at 265 to me is not cheap.
I'm guessing, though, you love MicroStrategy at 330.
I would sell MicroStrategy. I'd be on the short side of MicroStrategy until it gets to zero. I think MicroStrategy, seriously, I think MicroStrategy is the riskiest stock. It is going to one day. It wouldn't surprise me if MicroStrategy caused the next market meltdown because of all the related double and triple MicroStrategy ETFs that are out there and all the pressure that it puts on digital assets, it would not surprise me if MicroStrategies is the catalyst, not for the next market crash, but for, a mini crash or something like that, just a meltdown. Like MicroStrategies has a true single point of failure. They can't sell anything. They cannot sell an asset. And should they have a call for whatever reason, or the investors want to get out and puke their positions, which I don't know why anybody would buy that thing, that stock has a single point of failure. So does Tesla. I mean, Tesla to me also does. See, MicroStrategy is Tesla. I think if you want to play anything in the digital asset world, by far the safest play with liquidity and leverage is Coinbase. By far.
I would agree with that. That was a bold statement. Somebody clip that MicroStrategy statement. It might be, we might be using that in the next year or so. Bitcoin just got under 93,000 as you were speaking, Tom.
I'd like to see Bitcoin actually. I think it would be healthy for Bitcoin to trade under 80,000 because you got everybody way too comfortable, way too long. I'd like to see ETH go back into the high twos. I'd like to see Bitcoin go into the high sevens. And then I think you have a much more interesting play, because then I think you'll pop up. You'll at least you'll draw more interest from contrarians like me.
I could say that about almost every asset, though. Every asset, I could say, if you brought it down 20%, then you get more participation from individuals.
That's true, but the difference is that you won't get 100% volatility in every asset. So like you could easily say in Apple, I like the argument. You could say, listen, if Apple's 255, right? So Apple drops 20% and goes to 200, you'd say, I'd love Apple here, but it's still going to have, a 30% volatility. Bitcoin drops, 20% here. So let's just say it dropped 20%. So it drops down into the 70s. You're still going to have 100% volatility. So if you want bang for your buck, that's all. That's the only reason I say that.
Fair enough. And a great point. How much does Tom Sosnoff care about holiday spending? I'm not going to say the number. Spending? Yeah, like when you come back
to prove
after
my
Christmas,
sincerity, to prove my love to my loved one, to prove my love. I mean,
that's not what I mean. I mean in the economy. I mean when you get back from like Christmas or like Cyber Monday, whatever. Does Tom Sosnoff go check the numbers and say, hey, do you go to the research team and go, hey guys, were we up over last year or not?
Do you think I do? Does that sound like a question I've ever asked in my entire life?
I could totally see you running into Jajun or God after the holiday shopping weekend. Goes, guys, give me the number.
This is something I would yell at Vanetta about for covering. I'd be like, what is wrong with you? Who the hell cares? Like, it's like, oh my God, Amazon had an uptick on Amazon Prime Day or whatever it is. By the way, S&Ps, which were up 7 earlier, now down 175. Nasdaq's up 4, and the Russell's unchanged, and the Dow's down 35. Bonds are still down 5. They haven't moved. They're stuck in the mud.
Aussie dollar and natty gas, the only things really moving. But what do you say we keep the show moving?
It's up 28 now. It dropped off a little. It's only up 7%.
Yeah, let's bring in Pete Molmet. Pete Molmet, welcome, my friend, to First Call.
Gentlemen, how are you tonight? Good to see Pete. You both. Good
Happy
to see
holidays,
you, Tom.
Pete.
Yeah, thank you. Happy holidays to you guys too. Yeah, Victor, you got definitely exposed to the plague. I remember those birthday parties very well. And it's just like, really, dudes? There's a hand washing station. There's other things. No, there's a lot of stickiness and a lot of collective sharing. So, yes, welcome to the world. It only gets worse, too.
This 5-year-old walks up to the chocolate cake as we're singing to no. It was a little sister. It was a 3-year-old. Walks up to the cake as we're singing to my son, sticks a whole hand into the middle of the cake and starts licking her fingers clean. And I'm thinking, okay, that's a trip to the hospital for me.
All over it.
That's a trip to the hospital for me. Thank you very much.
That's a classic. I remember we had a gymnastics party for my oldest son who was like 10 or 8, and my youngest, Chris, was 3 and was just having a fit because he couldn't go out there. It was too small. And my mother-in-law's there, and Chris is screaming, and he's really upset. And Michelle always was very anti-soda. The kids can't have soda. And my mother-in-law, who is just the sweetest woman, Millie, goes, here, give him a Sprite. And give him another one. And it was like 3 Sprites later, he was the happiest kid on the face of the earth. Now, granted, the rest of the day was a little painful for us, but the Sprite magic did work for him. So, yeah, I remember those fondly. But, yeah, it should be an interesting week. Rolling into month end. Dollar. This is the first a little bit. You called it out, too. Aussie up a little bit. Canada, a little bit of a bounce. Kiwi, some of the things like New Zealand dollars. New Zealand's at 22-plus year lows. Aussie, Canada, all getting beat up on the tariff talk, the trade talk, a little bit overdone. It'll be interesting to see, if we could stage more than a one-day bounce, because we really haven't been able to in any of these commodity currencies. I was actually just looking, as you guys were going through, looking at FXI, which is down off its highs a little bit, but looking at stocks that maybe might be a little bit interesting going into it. If these commodity currencies start to turn and hold a little bit, maybe something like FXI is a little bit interesting right now. I know the vol is not there. You're looking at some sort of
to make money in there, Pete.
Yeah,
it's so hard to make money in FXI. It's like it doesn't matter what you do. You could sell puts. You can't make money. You can buy stock. I feel like it trades $30 from I feel like it trades $30 to $31 and nothing ever moves. I think if you want to trade China, and there is no great trading vehicle for China, but I think if you want to trade China, if you want the big moves, you can buy some PDD, and if you want the cheap stock, you buy JD, and then if you want the middle stocks that have the most option volume, you pretty much stick with Baba and Baidu, and that's it. Yeah. You just sell out of the money puts in there. It worked for me in all of 2024. That was my best China play. Just sell out of the money puts in Baidu and Baba. Don't sell any calls. Every time I sold calls, I paid for it. Just sell the puts and just sit back, relax, and enjoy the show.
Yeah. Yeah. Because, you look at whether it be Euro stocks or anything else. I mean, you've got so many Canadian market too.
The Canadian market is.
Look at Latin stock. Latin American stocks too, stock markets, all getting just drilled with this tariff stuff. And
how would you like
whether
to be,
this is a big game of chess or not. No, go ahead.
Vic, I was thinking about you. How would you like to be in Canada right now? Your dollar is in the shitter. It's the worst. It's like, is it under 70 yet? It's low.
Yes.
Oh yeah. Yeah.
Oh, it is? Okay. So it's under 70. And all you hear is talk of being the 51st state in the U.S.
I'd be furious. But they're furious already.
Nothing would piss me off more if I was Canadian. Nothing.
He's just needling him. He's making it even more difficult going into the re-election at the end of the year.
Right.
Of course.
It's the most brutal, just poke, like 2 pokes to the eye. Justin Trudeau's already having some political difficulties. It looks like he's going to get rolled by Pierre Poilievre, and he's just calling him the governor of our 51st state. It's such a brutal political move.
Yeah, I know, but then you've got idiots like Kevin O'Leary talking, 50%.
He's taking it serious like an idiot.
I know.
What the hell? But he's like, I want to go to Mar-a-Lago and negotiate the deal. It's like, what the hell are you talking about?
I mean, can you imagine being Canadian going, I want to be the 50%? You'd basically cut your arms and legs off before you'd agree to that.
I bet that wasn't what you started that saying, thinking you were going to say.
But, for these countries, the easiest, one of the great tools you can use is, you want to put a tariff on, that's fine. We're going to mark our currency down by 10%.
Exactly.
And that's why, you don't see anybody, Canada at 22-plus year lows, Kiwi, Aussie, again, getting hit really hard. China aside, nobody's raising the flag like, oh, my God, we've got to support these currencies. They're going to use this as a tool to, you want to put a tariff, we're going to put the country on sale and fight right back. So it'll be interesting to see how this shakes out. Granted, with a lower currency comes inflation, but it doesn't seem to be quite the concern anybody has right now. So the interest rate pieces, I think, starting to get interesting as we go into the new year. Victor, you kind of walked through the amount of debt they're having to roll over at these rates now and what that's consuming in terms of what they have to pay. is a lot. Saw some nice steepening in the 2s10s last week, which was nice to see. In both, we had a decent up day in bonds, and then we kind of Friday they hit them really hard down to 113. Tom, we're right at that low end of that range.
I thought those two reversals on Tuesday and Thursday. Because Christmas is Wednesday.
Right.
The reversal, the 25 tick reversal on Tuesday and the 25 tick reversal on Thursday felt like the best low I've seen in like forever. And then on Friday, right back down to the lows. Right back down to the lows. I mean, if this is a classic triple bottom, which I doubt, but if it's classic like that, it would be really amazing.
Yeah, because on both those days, it felt like they finally trapped the shorts.
Yeah, I thought they did. I thought the shorts, the selling pressure dried up.
Right. And we'll see how that plays through.
Well, we're at, I think we were at 31 basis points in the 210, which is as steep as we've been since we've uninverted. Right. I think previously we got to like 26, 27. So 31 is the steepest that we've been since this whole thing started.
Yeah, and honestly, this is what I'm leaving alone. I think it's got some because it's working on these up. If these shorter rallies we're having in bonds right now, it's working well. And on the down moves, the twos keep holding in there. And I don't know if it's supply concerns, whatever it is. It's just this is something that I think has the potential to normalize a little bit more. So it'll be interesting to see, though. I'm waiting to see if there's a knock-on effect to this kind of coming into Russell, because Russell has been holding in on some of these down moves in equity.
The Russell's not going to rally until the bonds turn up. As soon as the bonds turn up, the Russell rally. It's been the Russell has been tracking the bonds almost what feels like tick for tick.
Right. Yeah. I think that's going to be a challenge. Silver's down near $30. That's interesting. If you're just looking at I'm looking at stuff that's kind of been, run its course, the upside and down within the last couple of weeks. It'll be interesting to see if there's some year-end flows. Sometimes Tuesday's an interesting day where they kind of take some gas out of extremes here. So they marked a lot of the silver rally out early. I mean, we're off, almost 15%.
This is an equity marketplace. I don't care about the the commodities.
Okay.
I think this is really an equity marketplace. I mean, everybody, 99%, it feels like, of our, no, I shouldn't say, we trade a lot of futures options, but most of them are index related.
Right.
And when you look at the volume, like 3 million NVIDIA contracts trade, 2.5 million Tesla contracts trade. I mean, this is an equity stock pickers play right now, even more so than even an SPX. It's crazy.
So where we look at Tesla, it got hit again Friday. I would imagine you have no interest trading.
I have no interest. I wouldn't buy Tesla if it's trading 350, 331 right now.
Victor, are you willing to trade both sides at the upper end of the range like this? See, I'm
not willing to trade both sides.
I'm saying
no chance.
But it does seem like it's run out of a little bit of momentum in the short term. I would say, to your earlier point, though, on commodities real quick, it's your dime, your dance floor. The only thing I would say is this market seems to be a barbell. And the 2024 was a barbell. They run to tech and then they go, oh shit, we can't build. We need more data centers, and we, in order to build all this shit, we need materials. And oh man, we're in this fight with China, and some of our materials are sort of limited. And then so you see this run in materials, copper, silver, gold, all this stuff will run on inflation worries.
Right.
Then we go run the opposite direction. It's like inflation, disinflation, and it's tech materials. So the only thing I will say is, nobody cares about materials now. Nobody cares about commodities, but that tends to be an interesting time to accumulate, at least for the last 12 to 18 months. I'm done.
Hey, we got to bring in Ilya, Pete.
All right.
All right, guys, have a great night.
Thanks.
See you, Pete. I'm speaking my book, of course, Tom.
Of course you are. That's why I didn't comment on it, how ridiculous it was.
Not ridiculous. Ilya, what's going on, my friend? Welcome to First Call.
Gentlemen, how goes it?
Great.
It doesn't go too well if you're holding a bag of materials and Tom doesn't want to talk about it. It's all right, man. What'd you think about that little Friday sell-off, and how do you think about risk going into the week?
I wasn't mad at it, needless to say. I'm still holding on the short side. It talked me out of getting out of my Russell puts, but I'm still getting a little bit antsy in it. Obviously, I've been sitting on them for a while, and it looks like we're kind of stalling here. So we'll see how it goes. I still have 19 days until expiry, so I'm kind of getting up there. I don't love what the bonds are doing, but I agree with Tom. I think they're bottoming. I think they're getting to levels where there's probably. I mean, I definitely know I got in too early, but I don't think I'm convinced that they're not bottoming here at this point. So I'm only gonna keep rolling it out at this point. So I think it's going to be a choppy week with thin liquidity and lots of weird outturns, much like we saw last week, where things would kind of do their thing without really any particular rhyme or reason. And that doesn't mean like they had a catalyst or there was news. That just means like when you look at intermarket relationships, you typically expect to see things find some kind of rhythm to them, where if yields go up, then gold goes down, something like this, to kind of give you a sort of simple intermarket relationship. It's been a little choppy the past week, and of course it has. Participation is low. Lots of markets are closed. Liquidity is thin. I think you're going to have something similar this week, probably even more so, because even more markets celebrate this round of holidays than do last week. So, for example, Japan is going to be off for New Year's, whereas they didn't really care about Christmas for obvious reasons. So it's going to be thin and choppy and weird. And the mission for me is not to over extrapolate, not to get sucked into anything that's not going to be a real move once liquidity comes back.
For me, this week, we're going to get some housing data, and finally, higher long-end yields got priced into the home builders over these last 2 weeks. ITB or XHB or, Pulte Homes, KB Homes, whatever you look at, as long as it's on the low end and not on high-end high builders, they got murdered over 2 weeks. So you have some catalysts here. I don't know, if you're a vol seller, there might be some catalysts this week. Vol's pretty decent on a lot of these underlying, so I'm going to be looking at those given the economic calendar. What's on the calendar for the upcoming week, Ilya, that you think may be an interesting trading catalyst for any underlying names you've got your eyes on?
I think if you really want to look at what's on the calendar this week, it's the PMIs where you have to go first and foremost, because I think one of the biggest issues that we're going to wrestle with next year, sort of broadly speaking, is that growth only really is doing well in the US. The rest of the global economy is doing horribly. And that means that basically the global economy operates without a safety net. So if whatever happens, tariffs or retaliation to the tariffs, the negotiations that happened with Mexico and Canada about the USMCA getting renewed and all the shenanigans that are likely around that, the many corporate loans that are going to get refied starting this year and going into next, or for all the cheap money that got hoarded during COVID. All of those things are potential risks. I'm not saying they're going to crash growth, but they're potential risks to slowing the US down. And we're in an environment where if that happens, there is no China and there is no Europe to backstop. Both of those economies are in shambles. And so I think the PMIs are going to be interesting to look at to get a sense of where global growth is, and kind of to remind everybody. For example, the Chinese numbers are due today. I talked at length about it on Macro Money last week. They're probably going to say that China's economy is stuck still, and that the 6 consecutive quarters of deflation, they continue. That's not a recipe for good vibes. And then through the rest of the week, bunch of PMI data from the other major economies, Europe, Japan, Australia, There'll be final revisions, but there'll be sort of growth, global business cycle type of numbers. And then, of course, you're going to get the manufacturing ISM numbers out of the U.S., so you'll get that update for us. Never mind the numbers. If the message there is this divergence continues, and all of what you have to think about for next year comes at a time where the world can't afford a U.S. slowdown really of any kind, that's the issue. And so the question is, what does the market do with that information as you roll into January?
I'm going to ask you guys one question. Give me something to be positive about in 2024. You guys always come in here and tell us how we should be playing the short side, that the pot odds favor the downside. 2025, excuse me.
Yeah.
Give me what's one thing you're excited about or you have a positive outlook on going into 2025 Whether that's
you say that like being bearish
is
not a positive mindset. It's a very positive mindset.
I think for any of us who trade, when you trade two-way, it doesn't really matter. Up is down and down is up. Exactly. But I'm just being facetious to have an opening for a question. That's all. I'll start with you.
It's really funny, but I go into every year kind of the same way. If we were up the prior year, I'm a little bearish, and if we were down the prior year, I'm usually a little bullish. Like I'm just a contrarian in that sense. So like, I look for things that I think are oversold, like bonds right now, and I look for things that I think are overbought, like the NASDAQ. And I go into the year thinking that, I think we got 2 days. I'm going to disagree with Ilya on one thing. I thought the volume was pretty heavy last week, all things considered. Mm-hmm. And I thought there was actually plenty of trade. And the option volume, one day was slow on the Christmas Eve, but the rest of the week was actually pretty busy, including Friday. And I think the market's going to have some trouble the next 2 days. I want to see where we close the year out. I think they take out the lows from Friday, which are about 50 handles lower. So I think the next 2 days are going to be super interesting. I would be surprised if they goose everything. I know people want to window dress and mark everything up the last day of the year. I'd be surprised. I think they got a better chance of marking them down, but who knows? We'll see. I don't know. I think that'll be interesting. I think next 2 days are actually going to be interesting. And then everybody's going to be debating on when, or trying to figure out when they're going to have the market's going to be closed for Jimmy Carter passing. Mm-hmm. So that'll probably be within the next 5 days. And I don't know what day, but so maybe Friday or Monday. I don't know. Probably won't be Friday.
Why do you think not Friday?
I think they don't like to. I don't think it'll be Friday or Monday, and the reason for that is I don't think they like to close markets for 3 consecutive days, and so I think they would rather have it on a Tuesday, so there's no consecutive days.
Fair enough. Ilya, what's your one?
I don't know that the markets have any say in it. I don't know that the New York Stock Exchange gets a say, but if they do, I think that would be the reason they don't want to be closed 3 consecutive days.
They should ask Tom Sosnoff. I don't know why you don't have a seat at that round table.
I don't have a seat, Victor, at any table. The only seat I have the only table I have a seat at is in my house. I have no seats at any table.
If you don't have a seat at a table, me and Ilya and I are in trouble. Ilya, what's your one thing to be?
We don't even know what a table looks like.
We're laying in the grass outside. If you don't have a table, a seat.
We're not in the room or in the building.
Every time I ask for a seat at the table, I get the no thanks, we're full.
Yeah, right. Right this way, Mr. Sosnoff. Will it be the usual? Like that scene in I'm gonna blank. Is it Goodfellas where they bring in the chair, the whole table? They bring it in, put it right next to the stage.
Yeah,
I think that's Goodfellas. Ilya, what's one thing to get positive about in 2025, and then we'll get out of here.
Well, I think people are too scared of inflation, and I think that's part of the story in the bonds, why they're probably done falling, if not here, then soon, why the dollar is going to correct lower against at least the European currencies. The commodity currencies are having a really hard time. But the euro, the pound, if you want to go to the spot world, the Swiss franc, all of them look like they're getting ready to move higher against the dollar. And I think that'll be a positive surprise for consumers. I think the fear of reflation is not going to be as dramatic as is feared. I think it's going to be stronger than the Fed wants it. And I think rates are structurally higher now, and they're not going back to the pre-pandemic normal, probably in our lifetime. We're probably in a more inflationary environment and a higher rate environment than we've been in 40 years, and it'll be another 40, 50 years, whatever. We're in the next leg of the big credit cycle. From the kind of late 80s into the pandemic, we sort of saw structurally lower inflation, structurally lower rates for decades, for 40 plus years. I think that's over. And the winds have changed and inflation isn't coming back down to those levels. But I think right now, just really over the past, say from mid-September when the Fed made their big dovish move and the market said, no, you're wrong, I think that's probably overstretched now. And so that'll be a positive surprise for the economy. It'll be a positive surprise for consumers. It'll mean that the Fed doesn't have to be nearly as hawkish. And then from that, I extrapolate higher bonds, higher gold, weaker dollar, at least for a while.
Fair enough. Somehow I asked you, I feel like that was the opposite of the tell me your biggest weakness. So I work too hard. I asked you to give me something positive, and you said we're not going to see. Basically, you slipped in deflation into the U.S. economy.
Disinflation.
I know, I'm just kidding. All right, everybody, that's going to do it for us. For Ilya Spivak, I am Victor Jones. For Pete Momat, the one, the only, Mr. Tom Sosnoff. This was First Call. We'll see you back here at Tasty Live tomorrow bright and early. See everybody. Peace.